Hi everyone, it's Ryan with SacramentoAppraisalBlog.com, and today I wanted to give an update for the Sacramento real estate market and really to share some good news for first-time buyers especially, and really buyers in general. But also I want to take some time to, I think, dispel a myth that I'm hearing in the real estate community from time to time about FHA. So we'll get to that. Here's a general market update. Median price saw a dramatic increase this year, and it's since really begun to stabilize. This is normal in fall for values to cool off a little bit, but I think what's a culprit? There's a few things behind it. You'll see the months of inventory has essentially doubled recently. It was very low around 1 month, and it's more been hovering around 2 months, and that's causing the market to slow down. Definitely because there's more houses on the market. And one other thing is interest rates. You'll see an uptick in interest rates over the past couple quarters, and essentially what this means is that for the same amount of money, buyers can afford less house, okay, because of the way that their payments are. Rates are still incredibly low, which is good news, but that definitely tends to impact value. Unemployment in Sacramento County, you can see that it's definitely trending downward, but we're still around 9%, which is quite a bit, and it'd definitely be nice for us to get down to 5% eventually, where we were during the previous real estate boom. Okay, let's talk about cash in the market. Here's all cash sales in Sacramento County represented by the yellow line. You'll see in early 2012 cash really began to increase and then really hit a peak in early 2013 when cash sales represented about 35% of the entire market. All right, but since then cash has really begun to decline, and that's given room for a lot of buyers to enter the market instead. Okay, you'll see this blue line above. These are cash sales under 200,000. It's significant to, I think, look at these separately because cash sales under 200,000 is really where investors gutted the market over the last year, because for many months on end, about 50% of all sales in the county under 200,000 were cash, as you can see, but dramatic decrease lately. Now, why is this important? Let's take a look. Here again, the blue line is cash sales. When cash began to have a dramatic increase in the market, well, guess what? That pushed away FHA buyers. Represented by the red here are FHA. You can see just as cash increased, FHA had a very dramatic decrease. They were pushed aside. This is why it was so hard for first-time buyers to get into contract really over the last 12 to 15 months. But now what's happening, as cash has seen countywide over a 12.5% decline since 2013, especially over the last 3 or 4 months, FHA is beginning to see an uptick. Now here's where the myth comes in. I hear a lot of people say mortgage insurance was enacted over the summer where it's mandatory for FHA buyers to start paying mortgage insurance for the life of the loan. And I hear people say this is deterring FHA buyers. They're not interested. They're getting out of the market. They have less options. Well, I would argue that the stats are actually saying otherwise, because FHA countywide since July has seen a 3.5% increase. Okay, now let's look under $200,000 at FHA. You'll see here are all cash sales in blue, and we see this same phenomenon where cash has seen a dramatic decrease, and FHA really around the time when mortgage insurance was enacted, when that rule came into place, has increased by about 7% in the county. So again, I would say FHA is definitely increasing, cash is decreasing, and conventional is also up. So if you have any questions or thoughts, comment below. Would love to hear your take on the market, what you're seeing. Thanks so much for your time.